Hi there, I'm Rachel Sylvester, Associate Editor at The Nest, and I'm here today with Bree Romeo, Wealth Management Advisor with Fifth Third Bank. Thanks for joining us.
I'm excited to be here.
This is Money Mondays, presented by The Nest and Fifth Third Bank. Our goal is to provide you with some guidance surrounding your home purchase, which include costs you should consider when buying your home or renovating. Here at The Nest, we're obsessed with offering our audience the best in decorating and nesting advice and inspiration, but sometimes we don't take into consideration the costs beyond the purchase price. That's why we're happy to have Bree here today to answer some of these tough financial questions and offer advice on how to make your home ownership dreams come true. So thanks again for being with us, Bree.
It's my pleasure. Like you mentioned, owning a home is often referred to as the American dream. It's not always clear how to turn this dream into a reality, so I'm here to help hopefully ease the process a little bit.
So let's start off by quickly going over some ways to save or earn a little extra to put towards your home. The Nest suggests a few things. You can start by downsizing your current rental or lease to save money, or you can even move into your parents' home for a short amount of time to save up. Cutting expenses wherever you can is obviously a good idea. For example, eating at home versus at restaurants is one easy way to save that can make a big impact. You can take this even further by using coupon apps while grocery shopping to save cash. And if you have the time, it's worth considering entering the gig economy. So even if you don't have any creative skills, like for a specific freelancer, there are many apps like ride-sharing apps and task-oriented apps where you can hustle for some extra green without too much prior experience. Do you have any other tips for saving ahead for your home purchase?
You can utilize some other platforms that are available to you as applications, like a Roundup app. So something that will round you to the next dollar and automate that savings directly into your savings account. So if I spend $100.01, the rest of the 99 cents is going to be automatically sent to my savings account, which is gorgeous because it doesn't require for me to think about it, and it doesn't allow me to even consider that I have those funds in the first place.
Okay.
Also, setting aside any unexpected cash bonuses for work, things like that. Something to just stash it away and not think about it.
As far as buying advice goes, what's the first thing that buyers should do when they're looking for a home?
So my first tip is always meet with a loan officer at a financial institution. Get an idea for what you really can afford, because there are so many people who have this idea of their dream home and they get a realtor and they're looking at houses that are way over budget, and really it's just kind of wasting your time. It's wasting the real estate agent's time, and it's also wasting the seller's time. So ideally you want to get in front of that loan officer, get a pre-approval letter. What they'll do is kind of establish, hey, this is within your range according to your income. And that actually lets the seller know that you're a qualified buyer as well, which is helpful in the process.
So what specifically should home buyers take into consideration when shopping around for a loan?
You want to look at the rate and the terms. So obviously, the lower the rate, the better. But what are the terms of that? Many first-time homeowners look at a 30-year fix just because that's the most common type of loan. That just means that the payments are literally fixed over the course of 30 years every month. Because you're a first-time homeowner and the likelihood of you outgrowing the home, or you're moving for a new job, you may be selling the home likely in less than 30 years. So it's worth it to consider something a little bit smaller, but maybe with a better rate. For instance, a 10-year adjustable rate mortgage, also referred to as a 10-year ARM, is something that offers a lower rate, but after 10 years, that rate can adjust according to the current interest rate environment, so you're taking on a little bit more risk. So you really want to evaluate the pros and cons there to make sure that what is right for you.
That's great advice. What financial factors do you think potential homeowners often overlook when they start that home buying process?
So one piece of advice is that you want to consider all costs associated with the purchase of your new home, one of which would be closing costs. That's generally going to be 2 to 5% of the total purchase price. A second piece to consider is homeowners insurance. That really can be quoted through an insurance provider, and you can get a real understanding for monthly payments, what the premium looks like if you can afford it. Property taxes are also another big piece of the puzzle that people often forget, but that can also be researched on the county website, and you can really understand what to expect from a holistic budget standpoint and if you can afford it. And then the last piece that most people don't really consider as part of the whole budget is the cost to furnish the home. You buy the home, you have all these new rooms. How do I fill the space? And really, it's just really important to consider all aspects of that. Also, you want to fully understand the rate and the terms that you're being offered. If the rate is higher, your payment amount is going to be a little bit higher as well on a monthly basis. And the higher your credit score is, usually the lower the rate that you're going to be offered will be as well. As a general rule of thumb, you want to look at 700, 720, 740 for credit scores. That's what banks look at to offer the best rates. Get multiple rates from loan officers at different financial institutions, because what you can kind of do is negotiate between the different closing costs. You can get some credit toward those, or maybe a lower rate at another institution if you're kind of pinning them up against each other.
How can applying for credit drop your credit score, and how does that credit score then affect your mortgage rates?
So the more credit applications that you take on, the credit bureaus see that as there's a need for credit. And so it's a temporary negative toward your credit score. So if you go out and you search for various rates and have various financial institutions pull your credit, and you're also looking for a new car, and so you get a lease and they pull your credit as well, it's a lot for the credit bureaus to take on, so it's going to temporarily drop your credit. So you want to keep an eye out for that.
Is there anything you can do in the meantime to improve your credit score or make sure it stays the same?
Sure, a couple of things: making sure that you're automating your monthly payments so that the payments are on time every single month. Credit utilization is also a really important factor. So if you have $10,000 of credit extended to you on your credit card, you want to make sure that you're at or under 50% utilization. Over 50%, the credit bureaus take a look and they say, hey, she's using her credit card to pay for her essential expenses, her bills, her utility payments, that kind of thing. So you want to keep that under 50% if possible.
Okay, that's great to keep in mind. As far as down payments go, are home buyers required to put down 20%? And if not, what's the benefit of putting down more money at first versus putting down less money?
So being able to put down 20% is a great benchmark. And if you have that ability, I think you're in a great position to be able to purchase a home if that's what you want to do. It's not required though. And I think that's kind of something that scares away a lot of first-time homeowners, is that big chunk of change out of their savings, out of their pocket, something that they have to prepare for. And it could take years to get to 20% down for some people. And so 5% down is generally the minimum. The lower percentage you put down, the higher the risk is for the bank. So that means you get a little bit of a higher rate. So you really want to weigh the pros and cons of how does the rate affect your payment if you take on a higher rate, and kind of what are the opportunity costs with putting more toward the equity of the home or keeping some of that in your pocket. Cash is king. You could still utilize it as needed. It really just is specific to that individual person and their situation.
Well, I heard that you just purchased your first home yourself. Was there anything about that process that surprised you?
I did, and it's super exciting and so awesome. The process is done, which is great. I think the piece that really surprised me was how costly home renovations can be. Cosmetic things, very simple things like painting a few rooms in the house or furnishing this entirely new space that you didn't have furniture for previously. So a lot of those costs really are unexpected, but you can take your time on those and make sure that you take care of one room at a time and you don't have to go ahead and pay for everything all at once.
Yeah, patience seems like it's key there.
Absolutely.
That concludes this week's Money Monday series with Fifth Third Bank. Thank you so much to Bree and the team at Fifth Third Bank for providing insider financial tips. Please be sure to visit the link below to see more financial advice and budgeting tips brought to you by our editors here at The Nest and Fifth Third Bank. You can also visit 53.com/education to learn how its services can help make your life even better.